I've introduced the gift splitting election for gift tax purposes in the past, which can be valuable, especially in situations where the gift tax annual exclusion is being maximized for a married couple. However, if you go over the gift tax annual exclusion and start making taxable gifts, a little bit more thought needs to go into whether or not the gift splitting election is available and whether it might make sense. And it's important to note too that the election doesn't always apply to gifts that might benefit a spouse. I'm Griffin Bridgers, and this is 10 Minutes with Griffin. Today's episode, episode 229, really kind of skims the surface on gift splitting elections for taxable gifts. In the past, we've talked about this just for the general gift tax annual exclusion, but we're going to dive more into the concept that this also works to maximize the lifetime gift tax exclusion, but it may not always make sense to split gifts if the intent is to maximize the use of exclusion. As always, this presentation is not intended to substitute for legal or tax advice and is provided for educational purposes only. I do what I do because I enjoy speaking and teaching. This is my passion, so if you like this presentation or any other presentation I've provided, and if you'd like an in-person or virtual speaker for your firm, organization, or event, you can reach me at griffin.bridgers@gmail.com. Jumping back into our material for the day, the gift splitting election is very helpful in a married couple because it allows each spouse to maximize their gift tax exclusions. As a reminder, those exclusions are twofold. One, every single year there's a $15,000 annual exclusion per donee. And you can combine that when you look at the married couple as one gifting unit because each spouse has that $15,000 per donee annual exclusion. So, two spouses together could gift $30,000 to any one particular donee without incurring any gift tax for the year, as long as the gift is of a present interest. Above and beyond that, after you exceed the annual exclusion, or if you're not eligible for it, each spouse individually also has a lifetime gift tax exclusion, which is currently $11.7 million. Might go down in the future, we don't know yet. But when you can combine that, that allows a married couple as one gifting unit to give away up to $23.4 million during life. Now, the problem is who writes the check? So when you have a couple gifting as a unit, there may be one more moneyed spouse than the other who has the cash available to make gifts. So what the gift splitting does is it allows you to look at the couple as a gifting unit and disregard who actually writes the check. So if this election is made for any particular calendar year, then every gift during that calendar year typically would be treated as coming one half from each spouse, regardless of who actually makes the gift or writes the check or makes the transfer, so on and so forth. That can combine to allow the maximization of this annual exclusion and lifetime gift tax exclusion. Now, there are some complications here. When I say every gift applies to this gift splitting election, it's important to note that typically what I mean is that gifts to third parties from the married couple are what would qualify for the gift splitting election. There are some gifts to which the election would not apply. In particular, transfers to the other spouse. In that case, you can't split gifts, and it wouldn't make sense to split gifts with respect to those gifts. And when I say you can't split gifts, what I'm really saying is that the gift splitting election doesn't apply to gifts to that consenting spouse. It would still apply to gifts to third parties. So anything going directly to the non-donor spouse obviously wouldn't be a split gift in this case. Now, where this gets complicated is when we're dealing with transfers in trust. Now, the text of the statutes and the Internal Revenue Code specifically calls out a situation where a spouse is given a general power of appointment over a gift to a third party. In that situation, gift splitting wouldn't apply even though there is a gift to a third party. Now, What gets tricky is where there's a transfer in trust, where the spouse might be a beneficiary of that trust or is a beneficiary of that trust. There's no way I can do this subject full justice in the limited time we have here, but the words of the regs, the provisions of the regs, call out a situation and says that the gift splitting election won't apply where the spouse has a beneficial interest in a trust that is both ascertainable and severable. That's the standard for applying the gift splitting election to the trust. So for a number of gifts to things like a slat or an eyelet where the spouse might be one of many beneficiaries, this is where this can kick in. Now there's a number of cases out there and rulings, both private letter rulings and other things, and those all dive into the subject and of where and to what extent a spouse's interest in a trust might be ascertainable and severable. For the purpose of today's talk, there's a couple of factors that we kind of take into account here. We're going to break down and look at the income and the principal distribution. This is really kind of top of the bell curve. Like I said, there's exceptions all over the place, so I wouldn't take this slide as gospel, but this is my best attempt to distill the myriad of information down there to a coherent narrative. One, in a situation where all income is distributable to a spouse, the income portion itself is ascertainable and severable, since it can be valued as a life estate. So in that case, that income interest wouldn't have the gift splitting election apply to it. Instead, all other interests and trusts could use the gift splitting election, but that income interest to the spouse could not. Now, what happens if there's a principal interest and or a situation where income and principal are subject to an ascertainable standard? In that case, looking at income and principal, the spouse's interest in the trust may be ascertainable and severable. Now I want to call out that there's a difference in semantics here. When we're looking at an ascertainable standard like health, education, maintenance, and support, that's a different term than what we're looking at when we determine whether a beneficial interest is ascertainable and severable. So even though I use that word twice here in this bullet point, it's two different contexts that we're really applying this to. One is the standard for distribution, and the other is really kind of looking at whether you can reduce a spouse's interest to some determinable economic number. And as I've talked about in prior episodes, even though the amount may be nominal, I should say, you can reduce an ascertainable standard distribution to some economic number for gift tax purposes and GST tax purposes. So when you're in this scenario, what the court tends to do is dig into the likelihood first of income distributions and then of principal distributions based on an anticipated income rate of return and the beneficiary spouse's own income and assets. So unfortunately, there's no hard and fast answer here. It's more of a case-by-case scenario, which is why you tend to see this pop up in cases where the tax court is looking to allow or deny the gift splitting election for a gift that might benefit the surviving spouse. But either way, it's important to dig into whether or not the income or principal distribution is mandatory or discretionary. If it's mandatory, it's pretty much guaranteed that the interest is going to be ascertainable and severable. If it's discretionary, there's a pretty high likelihood that at least the spouse's interest would be ascertainable and severable. But then again, you have that additional layer of what the likelihood of income and or principal distributions. Now, in this scenario where you're gifting to trusts beyond crummy powers or beyond the annual exclusion, there can be some issues in a couple of scenarios. One, where gift splitting doesn't apply for gift tax purposes due to a spouse's interest that is ascertainable and severable, it may still apply for GST tax purposes. So it may be the case there that the non-donor spouse ends up using more GST exemption on the transfer than their own gift tax lifetime exclusion, which has its own issue. Now, there could be a variety of trusts out there that have an estate tax inclusion period, so there'd be no automatic or manual allocation of GST exemption at the time. But either way, it's important to look for that imbalance. And I'd say this is the point that's probably most commonly missed that a lot of planners could run into, especially when preparing gift tax returns that might report taxable gifts and apply GST tax exemption. Now, beyond the GST tax issues, when you have gift splitting resulting in taxable gifts, the election could be inefficient in a couple of scenarios, and this is really just kind of a case-by-case analysis. And we don't know what future legislation could look like, but it's possible that in the future one or both spouses could lose their own gift tax exclusion for lifetime gifts. So, depending on what that amount looks like, whether it's down to $3.5 million and it's still unified, or even if it goes down to $1 million with a higher estate tax exclusion, it may make more sense in some scenarios to use up one spouse's lifetime gift tax exclusion before using the others, depending on the gift amount, depending on the level of assets, so on and so forth. Now, in this scenario where you have taxable gifts, it's important to note that if you want to gift split, then both spouses have to file a gift tax return with cross consents to gift splitting. You can only get away with filing one return with a spouse's countersignature where you don't have any taxable gifts. In other words, where your calendar year gifts to any donee do not exceed $30,000, which is 2 times the annual exclusion. So, food for thought. Those are some tidbits on the gift splitting election and how that might apply in a broader context of taxable gifts, especially to trusts where spouses might have an interest. As always, if you have questions or topic suggestions, you can email those to me at griffin.bridgers@gmail.com. I remind you that in questions, those need to relate to the material itself. I cannot give tax or legal advice tailored to your specific questions or circumstances. Thank you again for listening to this episode of 10 Minutes with Griffin, and I look forward to seeing you in the next one.